Good morning and welcome to IG's early morning call. Lots to get you across on Tuesday, the 9th of May. First, let's get you across the headlines. The dollar inched higher while the pound flirted with a one-year peak on expectations. The Bank of England will raise interest rates this week and ahead of that GDP number. Meanwhile, the dollar is settling ahead of that CPI data and gold is holding somewhere above $2,000 thereabouts. And PayPal, well, its earnings beat expectations, but its outlook disappoints. More on that in a second. First, let's take a look at the VIX. This is the volatility index for you. As you can see here, it has come down considerably. However, it has been marching slightly higher in that 1st to the 3rd of May period and eased somewhat since the 5th of May there, perhaps comforted by the upbeat results from Apple and also the US jobs data, which pointed to a resilient labour market earlier in the month. Now, with 30 minutes to go until the European market open, this is how the pre-market is looking as we count down for you. As you can see here on this red candle ahead of the open, not too much of a downside ahead of the open, pretty flat to be honest, down 0.2%. Let's check on the German DAX for you, or otherwise known as the Germany 40 on the platform. A similar picture there, and European stocks, no surprise, look set for somewhat of a slightly flat open Tuesday. The UK, of course, reopening after that long bank holiday to commemorate the coronation of King Charles III. Overnight in Asia, this is the picture there. Markets were mixed in China. The trade surplus widened to more than $90 billion. But this is not necessarily good news for the country's economy. Imports unexpectedly fell by nearly 8% year on year, and exports rose by 8.5%. after a 14.8% increase in March. Over to Wall Street now. It's looking pretty flat ahead of that CPI number. There seems to be a struggle for clearer direction, which comes after a rally on Friday when US jobs data pointed to a resilient labour market. But as for the pre-market picture ahead of the open, it is looking rather like a tepid open, as you can see here. Investors counting down to that inflation report out on Wednesday and after that China trade number. Now, retail sales growth in the UK held its pace in April, according to the BRC. The consortium said spending at its member stores rose by 5.1% year on year in annual terms last month. But with UK CPI growth stubbornly holding above 10%, this means a rise in sales value masks a sustained drop in sales volumes. Helen Dickinson, the BRC's chief executive, said volumes fell for both food and non-food. She added that clothing sales underperformed as the poor weather left customers thinking twice before decking out their summer wardrobe. Separate data from Barclays, also published overnight, showed consumer spending on payment cards rose by 4.3% in April year on year. Now, moving swiftly on, we've got the Halifax house price index as well, which unexpectedly fell by 0.3% in April month on month. This is after a 0.8% increase in March. Now, the market had anticipated a 0.2% rise. Year on year, the index rose 0.1%, down from a 1.6% increase the previous month. Now, the pound hit a one-year high against the US dollar yesterday. Many currency traders now consider the greenback's rise may have peaked alongside Fed rates. This week, a set of macroeconomic indicators are likely to have a great impact on the GBP USD cross and, of course, the Fed's thinking as well. Starting with the consumer price index in the US, that's out Wednesday. Economists expect the index at 5% in April year on year, the same growth or pace rather as in March. The pace of core CPI growth is forecast to slow to 5.5% year-on-year from 5.6% the previous month. Anything higher than these expectations could force the Fed to revise its latest stance on monetary policy. Last week, the US Central Bank increased its Fed funds rate by 25 basis points, but sounded more cautious about the need for future rate hikes. Since that decision, the jobs report for April unveiled stronger than expected job creation and average hourly earnings, as well as an unemployment rate lower for a second straight month at 3.4%. On Thursday, the Bank of England is set to decide on its interest rates. A majority of economists anticipate a 25 basis point hike that would take it to 4.5%. Now, this is a level not seen since October 2008. And on Friday, we'll get the preliminary estimate of GDP growth rate in the UK for the first 3 months of the year. The market expects a 0.1% growth quarter on quarter. Now, this is equivalent to the one recorded for the last quarter of 2022, which confirmed that the UK economy had narrowly avoided a recession. Gold also benefited from the recent dollar weakness. Checking in on the gold price and the chart for you. Here's spot gold on the platform. Gold currently at around 2026, up some 1.2% so far in the session. It is early on, but gold has been tracking higher, as you can see here, since the February 27th of February mark, and then it since the 17th of March, it has been trading in this band between around 1,900 and 2,050 or thereabouts. If it breaks past this 2,071 level, we could then see it move higher to the next resistance point at 2,100. To earnings now, and we're looking out for a direct line in the trading statement released this morning. The group says its 2023 earnings outlook is challenging, yet trading has been positive over the first quarter. Average renewal premiums over the period increased 19%. PayPal is a key one to look out for. It reported better than forecast earnings and sales last night after the close on Wall Street. Yet the stock fell by 5% as the fintech group cut its outlook and focused on what it said about margins. PayPal reported profit of $1.17 a share on an adjusted basis. This compared with 88 cents last year, and was higher than the $1.10 anticipated. Revenue increased 10% to around $7 billion. But the group disappointed the market by cutting its adjusted operating margin forecast. It now sees a 100 basis point increase this year, compared with its earlier forecast of a 125 basis point growth. PayPal did very well in a low interest rate environment so far. Now that they are rising globally, though, some customers are now reluctant to make expensive purchases. PayPal payments volume has shrunk around 1% to $354.5 billion during the first 3 months compared to Q4 of 2022. Lowering expenses and cutting costs has always been a focal point for PayPal, and the group sees artificial intelligence, or AI, to be a strong ally for its future development. CEO Dan Schulman says PayPal expects AI to enable them to meaningfully lower their costs for years to come, adding that PayPal intends to use the tech to add features for both merchants and consumers on its platform. Now, we're on the tail end of the US earnings season, and what a season it's been. Today, among the companies set to report, 2 companies stand out. Airbnb is scheduled to report after the close. Like other actors of the travel and tourism industry, Airbnb should have benefited from the strong growth in the revenge travel trend. European travel, as well as recovery in China, have all added to this trend. The street forecasts earnings of 20 cents per share on revenues of $1.7 or $1.8 billion. During the same period a year ago, the group posted a loss of 3 cents per share on revenues of $1.5 billion. Now, before that, Under Armour is set to report its quarterly figures around midday. Analysts forecast earnings of around 15 cents a share on revenues of $1.3 or $1.4 billion. The same quarter a year ago, inventories were in focus. The group reported a loss of 1 cent. But more about those inventories and bottom lines. Inventories, as I mentioned, and margins were the focus for investors. 3 months ago, despite earnings, sales and guidance were higher than anticipated, and the stock fell on higher stocks and lower margins. Now, a quick look at oil prices now, because it has been very, very volatile of late. Here I have the chart on the IG platform. Let's zoom in on the last few sessions. It has tracked slightly higher since the 4th of May. However, it's sort of paused here at the 7,266 mark. Oil prices giving back some of those strong gains in the previous quarter, previous 2 sessions as well. Traders worry, of course, about those US inflation figures for April, because this will be key to the Fed's next interest rate move. The Fed raised rates last week in what may be the last hike of its tightening cycle. However, this does largely depend on whether or not inflation eases. That CPI number, just a gentle reminder, out on Wednesday, and we'll be watching that closely for you. And that's it from me. Just a quick reminder, we do have charting at 10:30, so do tune in for that or check in later, as we have it on demand as well. Before we go, a quick look at the equity markets. Here's a look at the FTSE for you. Still looking like a tepid open, as you can see there, or a flat open. Same picture for the France 40 and the Germany 40 as well. For all other news, do follow us. Follow me on Twitter. I'm Angeline Ong, and this is IGTV.